They could. I think to some extent I think they're a little bit neutral. They don't want people losing, but I think they also, as Eunice mentioned in the report, the diversity of opportunities for an individual investor in China are really thin, right? And so I think looking at the valuations in second and third tier markets is really, really important right now, and understanding where they are against, say, proxies, say, either in China or in other places.
You worried about a bubble again in property in China?
Whenever you have inefficient markets, you have to, worry about that, right? And so, but I think it's thrown around a lot with China, where it's just inefficient distribution. Whether it's the share market or whether it's real estate or whatever. One of the things I hope that the regulators and the central bank and finance ministry and other people start to learn is that they can't goose markets by talking them up. They have to let investors start to understand where those opportunities are and let it flow there naturally. Also create other opportunities for those investors to invest in other assets. It's going to happen
more organically as opposed to top down and by fiat. Understood. The industrial profits in China, that's a nice change, positive for Jan and Fed.
After 7 months or something like that. So it is positive. They're still not looking great, but it's positive. I think it comes just in time after the NPC last month, or earlier this month, and looking at kind of where that strategy is headed and where some of these zombie companies or some of these other SOEs that are inefficiently run are going. I think it's going to take until third quarter for some changes to take effect, take hold.
What kind are you talking about?
Well, some of the efficiency changes around companies, some of the, let's say, I think for
you
many...
mean they're not going to start laying off SOE workers until Q3?
No, I think they may before, but I don't think you'll start to see fundamental changes in markets and traction in markets in China until probably third quarter. So until people are accustomed to those, you'll still see some volatility in those markets because they haven't exactly been transparent about how they're going to implement them and when they're going to implement them.
And what does that mean for commodities then?
Well, commodities, you know what? I'm still not optimistic on commodities. I don't think we're back in a bull market for commodities yet, because if you look at U.S. industrial production, if you look at, I was just watching BHP down. If you look at all the bad loans that are coming through in Australia, ANZ is down 5% or something today. The question that I've been asking people since December of 2014 is, where is the demand? Okay, you have inventory to sales ratios in the U.S. going up, rising to the highest rate since 2009. You don't see inventories necessarily clearing in China, depending on what data you look at. And so until inventory is clear, you also have inefficiencies in energy markets. Iranians cannot store their oil in Egypt because they're being blocked out by the Saudis. So, you have inefficiencies in Iranians selling oil to Europe. And so as these inefficiencies are worked out, as inventories are cleared, we'll then get an idea. We have not hit capitulation in these markets yet. I'm convinced of that. How do I know that? Well, look at upstream deals.
Oil is going to go lower. Yeah.
Well, it'll go lower than it is now. I'm not saying $15, okay? But if you look at, oil fields in Asia are still running at capacity or close to it, okay? Yeah. You've had Sinopec and you've had other people say that they're going to start cutting production, but these guys always overproduce. So if they say they're going to cut production by 5%, they're just getting back to normal.